We're going to post the live link on our
Yeah,
Twitter.
Preparing to live stream.
Oh yeah, we should.
What?
Should at some point we should do it on our Twitter in the future.
Tweet it. Tweet the link.
Tweet it.
Post it. We
Tweet it.
live.
We live?
We out there.
All right.
Yeah.
I love when Eric
Good morning.
said, I think I'm in the Zoom. I think I'm in the YouTube right now.
I think I'm in the YouTube too, but I can't find the live stream.
It's in our Zoom. Just open it up at the top.
Yep.
But how come
Techno
it's not-
Kings here.
How come it's not showing on our YouTube channel?
Oh,
give
it's
it
there.
Patience, son. Patience. So we are live.
Oh, I had to refresh.
Our first one was an absolute disaster. I don't think it could have gone worse. No, actually, we had
Isn't this like our third one?
we had the merge live stream that was an absolute disaster on our own channel, and then Hoffman comes and saves the day and like puts it on their channel, which was great. So we did a bankless Alfalfa live stream on the day of the merge, which ended up recovering to a certain degree. And then we had one where Steven crashed 4 times, 5 times, and then had to come in from his phone, which kind of ended up working out. He was missing for half of it. So, yeah, we're 1 minute in and nothing has died yet. It's pretty good.
Our Christmas special was it was a goddamn disaster.
Yeah, man. All right, so quick reminder. This is a new thing we're experimenting with on Fridays, going all money and doing it live. So if you're here live on YouTube, what up? What's good? Amazing. 9:30 Pacific a.m. On Fridays is the plan. And if you're listening on the pod, it means that it's probably Monday by the time you're getting this. So if you want to be here getting it right away, injected into the veins along with your coffee, be here live on Friday. And also, ETH Denver is coming, and we shall be there. We're organizing an event. Huge thank you to Paradox from our community who's helping us organize this. She's an absolute legend. And more details soon. There will be in the Discord, so you have to join our Discord. Go to alfalfapod.com. And I know there's plenty of you out there that just listen that will probably be showing up to ETH Denver. So get in the Discord, get the details. Let's have a beer. It'll be fun. Meet in the flesh.
Well announced, sir.
Yeah, that was lovely.
Not bad, huh?
Voice of an angel.
Voice of a literotica
Yeah,
star
a
Yes.
deviant angel.
Yes.
with a golden penis. All right, so
So it's been a fun week. It's been a fun 2 weeks, right? You guys having a good time?
oh, yeah.
We're pumping, baby.
Everybody here long?
I'm not short, but transitory Goldilocks is kind of fun.
Transitory Goldilocks. I love it.
Yeah. Mm-hmm.
You finally
that's what
puked
we're
up you puked up the Ada shorts, right?
Yeah. When was that? I think when we last talked about it on recorded Wednesday, I went home that night and I was like, I closed a quarter of it. And then like an hour later, I was like, I closed more than half of it. and then the next morning, I was like, I closed all of it. So
When
yeah,
do you re-enter that thing?
I'm looking at it now. I don't know. I mean, that's what I'm hoping at some point we can pull up some charts maybe and
I need
discuss
some chart
it.
porn, Steven. I need some chart porn. Tell me which direction to take here.
I mean,
No
it's been
pressure.
it's been a boring few weeks for us, for me anyway, because it's just been, what are you doing? Like, not a whole lot. I mean, we saw this coming a little bit thanks to our buddy Chem there. But yeah, I made a lot of moves this week. What should we talk about first? You want to pull up some charts? We'll do some chart porn?
or should we do a Chem update first?
We do a Chem
Or is
update. No, I think we'll save the Chem update for
Kinda-
later.
all right,
I
I'm
think.
definitely curious about that.
Yeah. So let me see if I can figure out how to do this without blowing up the internet.
Oh, this is the
God.
moment.
Oh, God.
Here we go. This is it.
Is there a chart on the screen?
I see
I see magical
sort of
lines everywhere.
astrological.
Are you having a seizure?
Oh my
Yeah.
God. This is how you live?
Just so everyone that's listening knows and watching, I requested a 7-minute cap, but that's not going to happen. Let's see.
I want more.
Oh, no. I mean, I want to keep it relatively short here, I guess. I mean, I was really looking to get the fuck out of Dodge in this little zone right here, but basically over here, right? So had a nice long, played it all the way up there from the bottom, and then took profits. Had a nice little short at the top there as well. We can talk about that sometime if you want. What I wanted to point out to you, Nick, is we've got our this is like the reason this looks like such a freaking seizure is because this is like my long-term zoom out setup I got here. I got like all the magic lines and bands and but the cool thing is we've talked in prior episodes about this little net liquidity indicator down here. You remember this?
Right.
Have you put this on your chart
it's
yet?
No, but you said it's basically like a relative strength index of net liquidity. Is that a correct summary of it?
Yeah, pretty much. So we basically like as soon as this thing reset from like oversold to kind of down here, you can see like where this line is, boom, we sort of took off. This thing has been just on point. I mean, it basically called the bottom here at this green band. You went you did pretty good there. It told you to get the hell out of Dodge right here, actually. So that was a pretty good call. Like where that trade.
Can you
right
tell
there.
me, do you know if this is this crypto liquidity or is this overall?
No, this is
liquidity as
like
we understand it?
Yeah,
We
this
talk
has
about it
nothing to
normally.
do with crypto, really.
Okay.
This is just as we normally talk about net liquidity, like just the liquidity in the system that is kind of driving equities and whatnot. But it works really, really well for ETH. Like ETH seems to be, as far as I can tell, still just like a pure, like super high beta liquidity trade. The good news here is like this thing is still like it's still going down.
As
Right?
we go higher, it's
As we go
down.
higher, right? This is supposed to be the area where it like flips green and you get really, really long, and we're we're already going up now. So I think we've got a nice potential setup in front of us here over the next couple months. So I want to maybe get longer if we can kind of get back above, here. I'd feel a little more comfortable.
Can you say that number out loud just so people listening?
Oh yeah, that's right. If we can kind of reclaim and hold above like 16 or so, I would feel better about getting long than up here. We're kind of back in resistance again. There's some nice confluence between the 200-day down here at like the 1420 level or so. If I pull that chart back up, and please check the video if you want to see the chart, you can see at that level here, we got this little area of consolidation. So I would love to buy a dip like right here or wait for a little bit higher and then kind of add to my existing position. So that's how I'm playing ETH at the moment. Got a lot of altcoin plays too, but I know Armand wants to keep the chart time down. So maybe we'll move on and see if you guys have any other
I'm not gonna be
you
set
want
up
to share here.
teaser.
I'm not going to be
and
Here's the deal, though. This is a money episode, so while I may have different sort of dispositions, this is it. This is money. Let's get.
I do have two plays I wanted to run by you guys. Do you remember Chainlink? Remember that stupid coin we hate? But
It's the
I remember
worst.
being
I
bullish
spent
at like
so much goddamn time.
$40 a coin. I remember.
I think
being
I held
bullish.
it for 4 years, man.
look at what
Make some money
we
off that
got
little guy.
going on here, Nick. We've got a how long is that? We got 259 days
Whoa.
of sideways right now.
Okay.
Did I read that right? Yeah. 253 days of sideways. Look at this like tight little range here. This thing to me looks like at some point it wants to just absolutely send out of here. So I'm gonna like build a position actually in this. There's a lot of stuff that looks like this. Like Frax Share was a good example of this. I'm kicking myself because somebody was talking about this months ago in our chat, and I posted a chart of it, and I was like, man, this chart looks pretty good. This looks like a nice little accumulation range here, and it just absolutely sent recently. It's been one of the best performing altcoins. I mean, it's
I remember you
100 and-
mentioned
150% since I wrote
it's
that
not
message.
much, but It's a good start.
Uh,
Steven, you mentioned about Frax when we were talking about the liquid staking derivative tokens, and we had only focused on Lido and Rocket Pool, but right when we stopped the record button, you were like, "Oh shit, I forgot to talk about this one." So I think it had one of the higher returns or yields.
Yeah.
So anyway, just a related note.
It's been a good one, and it looks like it's got a lot more. I mean, look at this gap it has to fill here. Like there's like another 100% from here that you could make a case that it could go if it like really wants to send. So yeah, that's an interesting play. And one more, this is kind of like a later this year thing, I think, and you guys might hate this, but speaking of another coin that we all hate, this is DYDX.
Oh, this is a coin that I love to hate.
Love to hate this coin. And with good reason, because the market cap of DYDX is a little under 200 mil, fully diluted valuation, 1.3 billion. So like, I think like, what is that? Like 85% of all the coins that will exist still are not even in circulation yet. So,
and remember when you shared that website with us, token.unlock, token.unlocks.app? If you pull that up for DYDX, you'll see that on February 5th, so like in a little less than 2 weeks.
Yeah, I got it right here for you.
Look at that token unlock coming.
Look at this.
It's going to be, I think it's going to be like 2 times the value of the market cap existing is going to unlock in the next 2 weeks.
Yeah, February 2nd, I think, is the date. Okay. Yeah, we're going to double the supply of DYDX. And look at this. I mean, this is kind of basically July, basically beginning of July this year. We're going to go from, we have like 150 million tokens in circulation to like 625. We're like over tripling the supply by July. But after that, we kind of level out again. And I really like this app. I think it's like the best app that exists on Ethereum. I use it all the time. And it's kind of doing its own little accumulation thing right now. I mean, look at this. This is, you thought Link was crazy. This is the same thing. 253 days of just straight sideways. And if we get all the way to July like this is going to be like 450 days potentially of sideways accumulation. Like you could totally see this just kind of bottoming out, maybe even running these lows here and just trading sideways around like $1 or something. But like, I think if you can pick up a lot of this under $1, like over the summer, I don't know. It seems like it could be like a really good long-term play. That would also put the fully diluted valuation like under $1 billion, which is totally reasonable for me, right? Uniswap's like 5 billion. Coinbase is still like 14 billion, right? Even though it's gotten like absolutely wrecked. So
do you still have the token unlock page available?
I
do.
Did
you close that out?
I do.
Okay, so look at the pie chart on the left. Like the unlock is coming primarily from early investors.
Yes.
And I think that's important because like we talked about how ETH staking unlock is not necessarily bearish because like these are people that have like a long-term bias and they won't immediately dump. I think these like investors that are unlocking are sort of like the lowest hanging fruit to dump this coin. And that's coming soon.
Yes, they want to dump because they're probably just up big. I would be curious what they actually got into, right? But if you run a big fund, right, and you're up like 100x on your investment, even like 20x on your, like you take profits there. You don't be a moron and round trip that and have to go explain to all your LPs why you're dumb, right? So there's going to be some selling there, and it could be potentially nasty too. It's probably going to be a little muted in the beginning, right? Because we are expecting a bull period over the coming months. But if we get like that sort of inflection point in mid-February or even in May, then the second half of this unlock could be kind of like a bloodbath, right? If like the market is going down and people are unlocking, then they're selling as fast as they can.
Well, what did Chem have to say in his updated video? Because he had formerly said that mid-February was going to be like a reversal back to bearishness, right?
Before you respond to that, Steven, select your microphone.
Oh,
Thank you.
did it switch back?
Yeah.
No, it says
Yep.
it's no, it says it's
Sounds
good on
pretty
my
mediocre.
end. Really?
In Zoom, select the sure.
It is selected.
All right. Well, it's not.
It's literally the only microphone I have, Armand.
All right. Keep.
I'm on a PC now. There's no microphone. No other microphone exists. I'm sorry. This is what you're getting. I will.
I mean, I don't care.
I'm going to stop. I'm going to stop the share now. I think Armand's seen enough charts. You want to talk about? Do you want to talk about Chem now, or do you guys want to share any alpha first, or?
I want to hear Chem's take.
Let's talk about
first.
Chem. Okay, so Chem. I'm still not exactly sure how to say this guy's name. For those of you who don't know, we on this program love Chem Croissant of Kai Volatility Advisors. He is a options volatility savant. He basically called this rally almost to the day. We've been talking about it since mid or early December, I think, and accumulating for it. He gave another interview today, and he sort of did not change too much. He seems like very, very open to the idea that we are going to continue this kind of Goldilocks period, this temporary nice period where inflation's down, growth is remaining like pretty solid. The Fed is sort of worried about putting their foot on the gas too much. They're seeing inflation come down. They're like, all right, well, maybe it's a good time to just, to pull it off a little bit, right? So we could have this window, and that could either stop in mid-February, potentially as late as like May or June, where we could just see massive rallies in risk assets. He was asked if he thinks like the Fed is going to come out and play hardball now, because like we've been kind of trained to think that, oh, when markets are going up, Feds are going to come out and just slap us down in the press conference, right? And there's a case to be made that, well, they're not going to do 50 next meeting. They're going to do 25. So with that dovish, quote unquote, 25, maybe Powell wants to come in the meeting and like lay the smackdown again on the reporters like he did in the fall. But Jem doesn't think that's going to happen. He cited Brainerd's recent remarks, said they were super, super dovish. He said like some of the commentary from the Fed indicates that they themselves might once again think that inflation is transitory. They've acknowledged like the lagging effects of policy. They have like really ramped up interest rates a lot. So it's completely plausible that they will kind of not let the markets run for a little bit. He ultimately thinks, and we talked about this last week, actually, what is ultimately going to kind of break this market again? It's probably not going to be like a recession or a credit event. It's probably going to be like inflation rapidly ticking up again. And that's what he thinks. He thinks with the China opening and all the structural issues that are sort of still in place with inflation that come, summertime ish, or maybe, mid Q2, we start seeing a tick up back again in CPI, and that prompts the Fed to come back out again and say, nope, we're not going to have this. We're going higher than you're pricing in. We're going a little longer than you're pricing in. And then we sort of like markets have to readjust, and that kind of starts the next leg down. So that's my basic framework for how I am thinking about this. That seems to be how Jem is thinking about it as well. He said to start selling next month as soon as you start hearing the word Goldilocks everywhere. I don't know if that includes transitory Goldilocks. I feel like our disclaimer in front of it is not worthy of a sell. But once people are out in February saying, this is it, new bull, maybe pull some off the table. I think Feb 15 was his magic day. That's like a day or two after the CPI print, so that could be a catalyst if that comes in a little hot for some reason.
Yeah, and I guess if you think the Fed kind of believes in a potential soft landing, and they start, believing in themselves to execute that, that's probably like also a sign. I'll say that the scenario that he outlined later in the year where inflation ticks back up is really scary to me, because of what could happen with the bond market. So the bond market, if inflation ticks up again and starts to show that it's rising again, I feel like the bond market, people lending money to the U.S. government or lending money to corporations, are gonna ask for a really high interest rate, because the first time it showed up, it was kind of like inflation's here, it's could be transitory. We're not going to demand a real yield. But the second time it comes up, they will demand a real yield because it could stay for a long time. And the second time it shows up, it's going to be serious. And when you see like treasuries tick up to rates that we're not comfortable with, that means that our precious risk assets are the most vulnerable. If you have 5-6% 10-year treasuries, I don't know if it'll get to that extent, but when you're talking about that as a possibility, whatever probability it is, it gets scary to me, and that's the one I get nervous about the most.
Good point. I'm like still a believer that a deep recession is inevitable. So like I think this sort of Goldilocks period is temporary, and like it will provide a good entry for shorts is the way I'm viewing it. But like having these conversations is helpful because timing that short entry is going to be really important.
I mean, the thing I keep asking myself is, the core assumption that needs to constantly be tested in my mind is the Fed literal about 2% inflation, 2.0% inflation, and staying there? Because if that's the case, then it seems like it will require more the cost of money going up and the amount of money going down in order to achieve that. Because even now, right now, there is a gap between what the Fed is saying in their press conferences and in their written documents, where interest rates will be just even 9 months from now, and what the market is pricing in. And it could be that it even requires greater restrictions than what the Fed is even saying now. And so I guess as we go throughout the year, this window is going to close, because reality will set in, projections will revise, and that's where maybe the transitory Goldilocks starts to end. And yeah, maybe they don't do it now, smack people down in press conferences, but I think we've seen some people say that when the dot plots come out, that's where all the Fed presidents say, this is where I think, where my votes will essentially go for interest rates. As those come out in March and June, we could see that gap tighten between what the Fed says they're going to do and what the market expects. And that's when, Eric, maybe that's when the shorts really start to play out, if everything's in hand. But if the Fed is not literal about 2.0% inflation, and they might be cool with like 3.5, then I don't know. Then it's kind of, the whole thesis is a little off the table.
Yeah, it's just hard for me to see how we even go to 3 with like wages as high and sticky as they are, and China reopening. Like the big fear is that you get this kind of 3-pronged attack of, you get an escalation in the Russia-Ukraine conflict, you get China coming online and basically spiking oil energy demand, perhaps like around summer again, like we had last year. And then you have just the general stickiness of inflation on top of that, because people are just earning so much money, and they in real terms, they are actually richer by the stats, in spite of what everybody is kind of proclaiming. So that could be like a nasty cocktail for us. And I think the main thing for people to take away here is that Goldilocks, oddly enough, is not bullish. It's like midterm bullish, but in the longer term, a soft landing just sort of makes it so that inflation inevitably picks back up again, and we have to do this kind of terrible yo-yo up and down until, I don't know what the ultimate catalyst is that kind of finally ends it. But there's never been a decrease in the core CPI that the Fed is looking for without having like a really bad recession. So until like we get to that event, it's hard for me to think of any of my crypto positions or as anything more than trades. Like, and when I bought a little bit of spot in December for this, because I thought price was good, even long term. But like recently, I've just been trading perps. I've just been trading derivatives because like in my mind, it's just like I want to get into this position and I want to get out of it. I want to just click the close button and be gone and not be like buying and selling coins because I just feel like I'm not married to them. I feel like I can't really buy until maybe later this year. That's kind of where I'm seeing it right now. But who knows? I don't know. Are you guys accumulating any spot right now?
I YOLO'd some ETH calls back when we were at a lower volatility, and I think I'm just gonna hang on to those for now and sit tight.
Those are up then, right? Quite a bit, I'd imagine.
Crushing.
Hell yeah. Nice work.
Yeah, options are cool if you know how to use them, right? Because you can sort of strategically like add some like long convexity to your portfolio if you think like we're about to just like in vols low, and you can take risk off too. Like if you just have spot bags, but you're like, this is I have like a midterm bearish view. It's really cool what you can do with them. You can generate income on them. I know are you still writing calls on your ETH?
I'm kind of waiting. I put that on pause because I want to wait for this little pump to continue and then sell calls.
Yeah,
I like that.
Okay. Yeah, I sold some at 16 because I was like, like it's pretty pumped right now. We're at resistance. I think I sold the 2200s February. I have to double check. It seems very plausible to me that we're going to kind of run up to the top of that range for ETH. Like there is this range we have between like 1,000 and 2,000, right? So it seems very plausible that we run that and maybe even run all the way up to 25, depending on how crazy stuff gets this spring. I think that's totally in the cards. But I really do think ultimately at the end of the year that ETH is going to probably look like those other charts we looked at. It's probably going to look like the link chart. Maybe it may go up to 2K and it may go back down to 1,000. Like, and we may actually just do this kind of terrible range thing, for a year where people get chopped up and down. You could trade like a 2x move or half your money on the way down, losing it. But that could happen for a while, and we don't know. It's like so much of it is dependent on what happens with the inflation picture. If we soft land and then we have to keep like tightening and loosening and tightening and loosening, that who knows how long that happens. Like I think the best case for us is to be sitting in cash, and then we just have like a massive credit event or something, massive recession, everything just totally nukes. The Fed goes, okay, we got to redo QE, we got to turn back on the liquidity, and we just eat like a few months of short-term pain, but then we could just go back up again. Like this to me is like, oh God, like
that'd be ideal.
I hope it doesn't happen.
Can I bring up something about our Fed talk a little bit? I'm just curious if you guys think this is a big deal or not. So Darius Dale, 42 Macro, he makes a good point. I think he had a slide in one of his presentations that Chair Powell gets what he wants. There is a bunch of voting members, but he's the one who decides and everyone just goes with it. And he mentions that he's 70 years old and that he is concerned as a man of his age about his legacy. And he does not want his legacy to be he didn't control inflation and it spiraled out of control for 5-7 years. And so he means business. He's going to squash it down. He doesn't care that it will result in a recession. He even needs a recession. He needs you to lose your job to tame inflation and to save his legacy. So do you guys think the fact that Jerome Powell is 70 years old is a significant thing or not in this whole equation?
I basically agree. I agree with Darius Dale's take on that. And that's why I think the recession's inevitable and why I want to consider being short, just a matter of when.
Yeah.
I mean, that brings in the human element into the discussion, right? And so it's like you can sit and look for patterns as much as possible or recreate them and say this is unprecedented territory. But at the end of the day, there's humans involved, and I think that's a good take. People do both rational and irrational things when they get to that sort of stage of their life. You see that with Putin. Not to make this a political discussion, but I think there are some commonalities there for sure.
Cool.
Yeah.
I saw in the deck, and I figured I don't know. It seemed like a small point, but it felt like it had a lot more significance.
Yeah, I think it's the type of point that is background and gets discounted a little too much, but probably more significant than we realize.
How do you guys
Uh,
feel about the NFT market right now?
I think it's ready to just get absolutely smacked in the if this real recession actually comes.
It is absolutely smacked. It has been absolutely smacked. You're just talking about a double smack?
Oh,
Just a-
I think if you think you've seen the smack, you're not ready for the smack.
I don't care
I think
about the
I think
smack.
we've
I'm just
bottomed.
saying, yeah, I don't care about the smack personally. I'm just saying, I think we definitely, like, yeah, the whole thing just went down by 95% as expected. Will there be another 95% drawdown? Sure, yeah. If all these macro things we're talking about happen, of course. But where it is today to me is actually kind of confusing because what has developed now are these what I think a lot of the hypothesis ended up being true around the idea of community. I think what we actually ended up finding is that community is more powerful than we realized, and we thought that the entire NFT market would just completely disappear. But what I find most interesting is that it did not. And a lot of these communities are actually thriving, and the NFT just represents something to that community. It could represent a game. It could represent access to the community. It could represent the ability to build like 10K TF, and it could represent whatever the fuck the metaverse is in the future, and that community's position in that. I don't think anyone knows, but what they do know is that the economics of these communities is real, and it allows for, like Wolf Game, like there is a real community there, and there is a high transaction volume there, and a game being played, and it didn't all go to shit. So it's
But
really interesting.
to
I
play
don't.
this stupid game, you need to buy a character that costs $1,000. So like, how realistic is that to ever go mainstream at that price point? I just think like prices have to come down.
Isn't that just like every other technology though? Like when new stuff comes out, isn't it very frequently just uber expensive and inaccessible to all but like the high end, and then it kind of moves downstream? Don't you think the same thing will happen?
If by prices coming down, yeah, I agree with that.
Hmm. I I think one of the tricky things in crypto as like a crypto investor is like you get like very euphoric about stuff, but you also then get like overly bearish about stuff on the downside, and you kind of get into the habit of just this thing sucks, lol at you for ever buying this. And then you never make like 1,000x though when somebody likes something a lot. Like once everybody likes it, it's already gone up too much, and then it's coming back down. So you're always typically buying stuff that is beaten up a little bit. DeFi is a good example of that. I think we might say stuff. We talked about Aave a couple of weeks ago on the show with like the suckening, and Aave has been absolutely on a tear. I think people are starting to price that now, and I think some of those other protocols may come back and have their day again. But I wonder if we're doing the same thing with NFTs right now, and we're not seeing it. I got one more chart for you on the screen here. Can you guys see this?
Mm-hmm.
So we had a pretty bad capitulation in terms of both number of sales and like the dollar volume, or the average, or excuse me, the total dollar volume. But that delta has significantly leveled off now. We went from going straight down to we've been now trending sort of sideways in NFT sales since November 22nd. So we're 2 months into like a sideways move. And then sales volume is up from it's doubled over that time frame. Part of that is due to the change in the ETH price, so you got to be careful at how you're measuring NFT stuff, right? But ETH hasn't doubled since then. In fact, ETH is probably only up. I forget exactly when that day is, but it might be up like 20-25%. But it's interesting to me that there does seem to be a flatlining and now an incremental increasing in activity. And we have had a couple of these like mini NFT bubbles over the last year or two where like the market didn't even seem that great, but then NFTs sort of ripped. So I don't know. I'm like wondering if this is an interesting time to make some plays, but I also feel like I'm so disconnected from the market because I was just like so burned out on it and hated watching it go down so much that I'm not even sure where to dive in again.
Dude, what the hell is that spike in May of 22? Is that like one project launch?
That
That
is
was
that?
Bored Ape Yacht Club, right?
Bored Ape hitting like 80 ETH or whatever it was. Yeah, floor price at like a $4,000 ETH.
No,
Like, it
in
was
May of
just
22.
insane.
That
May
was
have, no, that was the other side, right?
okay.
the
the
spring.
other
Land
side?
sale.
Yeah. I'm pretty sure that was the other side drop, and that was the top of apes, right? Around then.
The whole thing just rose like the floor of apes, the floor, the opens.
Yeah, I mean, it's wild how much of an impact that just kind of trickles down into the rest
Oh
of
yeah,
the
May
ecosystem.
was the others. I was in Greece. Yeah, and that whole thing was ridiculous. It was a terrible mint.
Yeah.
But it was high volume. I'm curious, do you guys even see NFTs being what we think they are anymore? I just see this like it's just going to continue to consolidate down into these great communities. And I think a lot of people expected it to just be like a handful. I think it'll be more than a handful, but I imagine there will be 100 great projects, and these 100 great projects will last, not indefinitely, but into the next era of what NFTs will become. And part of me thinks that we won't even refer to them as NFTs anymore. And the technology itself, that's the way I look at it. I ultimately just look at it as a technology, will find a new medium. And it will completely exit out of this realm of everything we see today on an open sea, which is games, fucking just JPEGs, access to communities. All that bucket of things will just sort of evolve out into this whole other
Right.
realm. So I don't know. Do you guys agree with that? And do you think it's worth owning some of these 50 to 100 great projects that will be like a relic of the early? That's the way I look at it. I look at it as a relic of the early crypto days, and you want to hold some of these, especially when you have Ethereum sitting at $1,000 and you're getting ready to go into the next bull run. I mean, a great play is to go from dollars to NFTs and go into the next bull market having selected the right ones. I mean, you're talking about a 5x gain on the amount of ETH you'll kind of end up with, most likely. That's how a lot of people became crypto rich, was in this last NFT bull run. They just bought the right ones. So
I think
I'm
I
curious
completely
your guys'
agree with
take
you,
on
dude. I think there's like the two different paths, right? There's the tech path and then there's this artifact path. I don't see much of a reason for NFTs like on the tech side to exist on the layer one. Like that's only for the artifact side of NFTs. So I think like your crypto punks and stuff can exist on layer one of ETH, and like that'll be very cool, but there's no like need for that to exist. So I think as you're describing like how this technology evolves and maybe it like turns into this other use case, that would probably be on a layer 2 or a layer 3, and where it's like it doesn't have the same use case as we think of NFTs now, and there's no need for it.
Yeah. You know what really surprised me was the Trump NFT. He actually crushed it.
It's still pumping. I think it's still like a 0.35 floor last time I checked.
Wow.
Hey, I have a chart for you guys. You guys
You
want a
chart?
I have a chart for you.
Wow.
Yeah.
Send it.
Hold on. How do I pull up the right chart? Shit.
He doesn't have a chart for us.
Well,
Oh, he does.
Desktop. All right. So this intrigues me, and I don't know why I missed this. I fucking really want some of these. So these are the memes by 6529. Super creative. Check them out. It's just like a bunch of relics. It reminds me actually of the very
FTX
first
Pepe.
project I bought. I remember when Nick told me about it, and actually we were all playing golf, Nick and Steven and I, and we like ran home to buy what are they called?
Curio cards.
Curio cards.
Yeah.
Curio cards. And it reminds me of that. It
Yeah,
actually
how'd
reminds
those
me
do?
of that. Oh, they're fucking dumpster.
Hey, they're gonna come back.
I believe in those though.
They're
That's
gonna
like
come
one
back.
of those relics that I would want to own. But check this out. Like like
So this is the memes 6529, right? When did this come out, by the way?
Dude, I don't know because this is a bad chart. I should probably go to a legit. I didn't do this in advance. I should go to like a legit NFT analytics site.
This is a great chart.
Dude,
Wow.
look at this.
It's a great chart. I want to long the fuck out of that.
Dude, look at this. These things were 0.1 in July when this shit was just
Less.
dead. When
God, look at
like
that.
after that whole, Bake, Bored Ape, Yuga Labs, like pump and everything went to shit. He came out with these, and look at them now. Look at the floor price. You could have got one for 0.06 and 5x'd it right now.
Yeah, you got to
Like,
buy
you'd
when
just be
nobody's
sitting-
paying attention and everybody thinks you're stupid.
Exactly, dude. I like them though. I still think they're.
I like the aesthetics
position.
of this, honestly. Like when you just pull up all the items and I
Yeah.
look over it, it looks great to me.
I
actually.
agree. Oh, I like her. Morning Z.
I think my my priority is to just buy cheap ETH first, right? And if I kind of overshoot
Yes.
my targets of the amount of ETH that I want, I think for me it falls into like three categories. It's the art, specifically generative art, I think is important long term because that art is native to the technology it's sitting on. The identity part, like CryptoPunks, I think is certainly a part. And then, you could talk about I don't know, what do you call them? You can call them games, but you could also call it casino and Risk. Like that's interesting to me. I don't know if the real games are anywhere close. I don't think there's really anything to invest in anyway right now for those. But those are three categories that would be fun to dabble in if I kind of am able to overshoot the amount of ETH
That's the move, man.
that I want to target.
That's the move. Buy cheap ETH, or essentially buy cheap NFTs on a dollar basis.
Can I switch to my non-crypto boring stats that I have to share?
I love it.
Oh, you
Bring
want
this. I love
to? Yeah,
this kind of
let's
stuff.
wrap it up. Let's wrap it up with a little shift here. We don't just
Okay,
talk about
cool.
the crypto.
Yeah. So this is a money episode. I've talked several times how I think that limited partner real estate is one of the best ways to accumulate wealth over a lifetime. Certainly not going to get rich quick, not going to double, triple up, in months. But on an absolute basis, I also think on a risk-adjusted basis, it's the best way to kind of ensure your financial freedom over your entire life. So every quarter, I get these distributions from these general partners. Have about 6 general partners that I invest with, and I wanted to share some.
I know you weren't
distribution
pitching me
stats.
just now, but I'm sold. Like the way you have that pitched
I mean-
down is just so good.
I mean, I am really high conviction about it, and I can go on even
Yeah.
more.
Yeah.
But I figure like since this is like basically an extended alfalfa round, why not just show what's going on? So obviously I blanked some stuff out. I blanked out the name of the general partner. I didn't really have time to ask them for permission. I blanked out some of the total dollar amounts, but I kept what is most important, which is in the right column here. So just so you know, this is looking at Q4, October through December. These got paid out on January 15th. And on the right-hand column, you see the annualized cash-on-cash return for Q4's distributions. And so let's just call out a few things. So it looks like the minimum is 6.5%, and it looks like the maximum is 13.2%, and the weighted average is 9.1%. It's important to know that the way I look at this is the post-tax number, but in reality, the depreciation from these properties cancels out any income. It's often greater than the amount of income you get paid from these properties. So on your K1 and your taxes, you have a negative number. So what that means is that this is essentially a tax-free number that, as a limited partner, I feel comfortable spending this money. I'm not going to take a chunk and set it aside to pay taxes. This is spendable money. So, you're looking at like a 13-14% pre-tax equivalent return in cash. In addition to these cash flows, there's obviously appreciation, and we can talk about. But for this convo, I want to highlight 2 things, and I think these 2 things are really where this type of asset starts to snowball. That it is really tough to find in other assets. So you see, I have 2 groups of property names highlighted. The first one is a green one, and then there's an orange one. So let's talk about the green one first. So the green one was
I can pronounce that if you want.
Some of us on this podcast are
Andante.
colorblind, by the way.
That's andante.
I didn't realize there were two colors here.
oh my god!
Can you?
I still
can
can't
you
believe
do,
you can tell.
Can you do red and blue next time for me?
Sure.
Thank
Yes,
you.
I'll do the R. I'll stick to RBG for you.
RNG is no good. Just get out of the.
Oh.
Don't mix RNG.
I'll do variations of gray. How's that sound?
You just run red lights, Steven. You just everywhere you go, you just run them. Is that
Well,
how this goes?
Well, if it's dark and I can't tell which light is the top and the bottom light sometimes, then yes.
Like
God.
that.
All right.
Or
We're not
I
driving
give you a
together.
license.
Anyway,
Okay. So first example, I want to show the power of this. There's two things I want to go over. I want to go over 1031s and refinances. And it just so happens in this specific general partner for this quarter, there's like a really good example of it. So the top ones, Andante and View 22, those are examples of 1031s. So I actually invested in a previous property about 4 or 5 years ago. And that one had grown at about a 41% annual return for about 4 to 5 years.
Let's go.
And then it was amazing. And it's funny because it was only cash flowing like 7% on average. It wasn't like one of the ones that stood out to you in the sheet, but when they went to go sell it, there was a lot of appreciation that was realized. And it was probably because just valuations of these, multifamily got elevated. But in any case, it was multiples on multiples of return. And we got a chance to 1031 it. So all of that capital went into these two properties. And you see one is producing a 10% annual cash on cash return and one is a 6.5%. But what I'm really interested in measuring is what is my cash on cash on the original investment, the money I put in originally. And the weighted average return of that money is 18.3%. So
Wow.
I'm getting 18.3% cash flow, basically tax-free, on my original money in. And so again, this goes back to why this is a good way to accumulate wealth over a lifetime.
Tax-free?
Yeah, because again, the depreciation on the property cancels out your profit. And depreciation is obviously a non-cash expense. Maybe in another episode, we can talk about why that happens and why that's so important. It's not like some scheme or hack. It's there for a specific reason, and smart general partners can use it to their advantage and to their limited partners' advantage. It probably lasts on any given property 10 to 15 years, so it's not forever. You're just not going to pay taxes, but the hold times on these can be around 7 years. So you typically have plenty of time to cash flow out these without having to pay taxes on your profits. So that's one. That's a big unlock, where you can kind of heavily compound your money. The other is the orange ones, Bella Vista and Westview in this scenario. That was a similar scenario where I had invested in another property in 2016, I believe. And 2 years into it, they refinanced 100% of the money out. And the reason was they actually increased the net operating income of the apartment complex. They went back to the bank and say, hey, instead of at 65% leverage, we're now at 30% leverage because we've increased the profit of the company and the valuation. So we want to re-lever up again. And they took that cash out and just gave it back to their investors. And that is also tax-free because, well, you can consider it a return of capital, or you can consider it a loan. You're taking a loan out. You don't get taxed on loan proceeds. So you're borrowing money in that scenario. And that's an example of how this is one of the very few asset classes where you can go 60% leverage, and it's not only acceptable, it's encouraged. And so you see on these two properties, 8.5% and 6%. And this is an example. I think the weighted average of that is 18% flat cash on cash. So two scenarios where over time, again, this took 7-8 years to play out for these things, but over time, these snowball, and then you have these huge legs up sometimes.
So I got a question for you,
And
Nick.
so I just want to showcase those.
I got a question for you, dude, because So the cash on cash return, 9%, you're saying you have a tax advantage too. So that return is actually higher when compared to other investments. I like that. I think your 18% weighted off your original cost is not something you can always expect, right? Because you got in basically at a low price and then they exited at a higher price. You know, somebody who's going in now would probably go in at a higher price and it might not stay higher. So like, how are you in your mind categorizing this style of return versus like what you'd find in another asset you like ETH, where you see like a potential upside of maybe higher than 9% annualized?
Right.
Like, how do you make that decision in your mind? How much to allocate to either style?
Yeah, that's a good point. So, when you look at these deals, they are highly illiquid. So these have increased in value drastically, but I can't be like, hey, can I get $1 million cash? I want to go buy a house. This is not going to happen. I can't pull the money out. So in comparing this to, say, I don't know, maybe the stock market, I need a much higher return for that liquidity risk. Now, when I look at ETH compared to this asset class, extreme volatility. It's one of the most volatile things we probably play with in our portfolios. And so for that, I need, and I don't know that there's like a term for this, but I need a premium. I need a return in exchange for that volatility. And so, most of these deals are underwritten at like 14, 15% IRR. Sometimes I get adventurous and underwrite them at like 17%. My experience has been that they kind of compounded at 20 to 25% annual return if you kind of find the right partners to work with. So in my mind, ETH has to kind of beat like a 50% annual return over the same time frame, which is like 5 to 7 years, and it can, right? But the whole goal of that ETH is to peel off cash in times of abundance and then put them into this like wealth machine. I found that it's hard to make money in real estate. Like if you don't have cash, it's hard to like make more cash with this. But if you have a little cash to play with, it is one of the best ways to amplify your wealth over a long period of time. So I guess the short of the answer is like, I just need to double that return and that I'm seeing in real estate for it to be worth it. And I think it will. I don't know. How would you kind of talk to me as like, someone who has experience, advising in these kind of scenarios?
I think of it like you just said it pretty much. Like if you have wealth, this is a great way to protect and slowly grow wealth. If you're trying to make it, like if you're starting from low and you're trying to make it, you can't really play this game, or it's not the right game to play. You want to buy ETH and you want to stack as much ETH as possible until you get to a point where you have sort of like real estate money, and then you can start playing that game to protect.
Yeah, I think that's.
So you both agree that this is much more of a wealth preservation strategy than
I think
because I know that you started this early. I mean, you started this, as you said, 7-8 years ago. So you weren't necessarily looking at it that way, and this is the majority of your portfolio, but it now looks that way.
I think of it, yes. Yeah. I think preservation is in quotes, right? Preservation means like maintaining purchasing power. So like you have to beat inflation, so like Nick's up in dollar terms, but he's also in a real return sense, he's like more wealthy now. So I think of it as like preserving your purchasing power, not necessarily like, because Nick's obviously making money here in dollar terms.
Nick,
we got a question.
Yeah,
I think I found it, and feel free to call it out if I missed it. But we had one question in the chat that says, what does year one and year two look like? Because you probably astutely noticed that a lot of these were invested in 2015, 16, 18, 19, and they've had time to grow. So I think what you should expect as of right now, what the market is pricing in is, kind of boring 5.5% cash on cash in the first year. And I'm currently in a pause mode for 2023. I've seen great deals come up, and I've purposely passed them because I've looked at historical returns pre, during, and after recessions. I think it's just much wiser to wait for, say, 12 to 18 months from here. But you should expect like a 5.5%, and it's really boring. And then you look at the 10-year Treasury yield, and you're like, what did I just lock up this money for 7 years to only get paid a few shekels initially. But you give it a year, you give it 2, and you do a few of these over time, and then your 60-year-old self starts to pat your 35, 40, 45-year-old self on the back.
So Nick, one more question that I just thought of. I know that in one or maybe several of your deals, they've refinanced the debt side of it, and that was like an effective payout to you. Can you envision a situation where like the Fed really tightens, you get like much higher interest rates when you initially go into a deal, and then interest rates fall back down when they start easing again? That would probably provide an opportunity to refinance, and maybe like that could be your windfall. So you like maybe like timing it like that.
Totally. So that would be ideal, and I would like to kind of time that scenario if possible. But there are 2 ways that you can get a refinance out, right? One is just that rates drop drastically, and you have an opportunity to redo the debt. But the second is that they're actually a value add scenario. They're actually, say improving, making renovations, leasing it up higher, making the property better, making it a better business. And that's really what you want to focus on. Will this be a better business in 2 to 3 years, regardless of rates, so they have a chance to refi? Just 30 days ago, I got a refinance out of nowhere. I didn't see it coming. Interest rates have been going up, but they just did a really good job on that property. And so there's more income, a higher valuation. And they decided that before rates go higher, let's just pull some cash out and give it to the investors. Another thing to look out for in these deals is what type of debt structure the general partner is using, because sometimes they will take these like interest only loans for 10 years, and there's a prepayment penalty, which means there is no chance of a refi, or if it is, it's going to be very expensive and kind of be a non-starter. So, in future episodes, when we dive deeper into stuff, we can talk about like what to look for. But yeah, I think that setup of higher interest rates, you're going to be, the thing is though, is that your cash on cash in these deals is going to be low. They may say it starts off at 4.5%, and it's just going to be really hard to make that decision. But if you think that the property itself will be, a good business in the future, then it still do well. Edmund
Quick
asks,
thing on this, on evaluating, or go ahead, finish that point. And
I just want to answer a question I saw in the chat. It says, were
Well, that's
all
what
of
I'm
these
bringing
ground up development deals? And so no, these weren't. So in these type of deals, you have 3 types of business models. You have core, value add, and development. Typically core is like, it's a brand new property, it's fully leased, it's got in place cash flow, you're not going to make any changes, it's going to collect whatever rents come in currently. Development is obviously picking up a shovel, digging in the ground and building it up. But these were all value adds, existing, maybe a 1990s apartment complex, going in, doing it up and leasing it up.
All of them were. Oh wow.
All of them. Yeah. I don't do the development
You don't
ones.
do the
They have a
development.
lot more risk, and the time to cash flow is usually like 2 years out. So
Just
then
of, needing to fill them up and yeah.
Yeah, exactly.
What about geographic? Obviously these are all West Coast deals. That was another question.
Good.
What was the exact?
Good point.
we
So
can wrap-
this
we
is
can
why
wrap
it's
with
good
this.
to
Is it restrictive
diversify
since you're
with
all West Coast? Yeah.
Yeah, it's good to diversify amongst general partners, because they typically focus on an area. So these ones are, you could see Arizona, California, Nevada, Oregon, Washington. But I have some in Texas and Kansas City and Ohio, Georgia, other areas. And my goal is to always find general partners that are just as good as, say, these guys, but that specialize in other geographies, because there's certainly maybe more risk-adjusted opportunities, say maybe in the South than California. So yeah, these are all kind of West Coast-ish, but there's other general partners that specialize in other geos, and there's other sectors too. This is multifamily. There's industrial and storage and all kinds of other ways to diversify.
I love it. Good little crypto real estate combo today. I thoroughly enjoyed this. Thanks for everyone who's here live in the chat with the great questions. If you're listening on the pod and you want to come, hang with us and ask the questions, just go to the YouTube, youtube.com/Alfalfa podcast, and hop in the chat. One thing I realized, because we're new at this, is we actually we can definitely improve on when we're showing charts to say out loud for you podcast listeners exactly.
Sorry about that.
Yeah, no, it's okay. I'm also apologizing because I realized I did it with the chart that I pulled up. We have to say the numbers out loud, and we need to tell you what we're looking at. So my bad. Yeah, would love any feedback on this model. If you guys like it, hop in the Discord, let us know. And I think that's it, right, guys? Anything else?
Yeah,
Yeah, congrats.
kudos to us. We made it.
No
4
disconnects.
screen shares,
Yeah.
no disconnects, no crashes. I feel good.
This is huge. This is huge.
It's a new day.
I love it. I love
Good
it.
stuff,
All right.
guys.
Let's
All
go
right.
crush the
All right,
day.
thanks for joining, everybody.